The long-term downtrend has been taken off course over the last 6 days to avoid contact with the 48 to 44 range, although there is room to climb back towards the 75 to 80 range within the next 1 to 2 weeks. Even continued strong bullish momentum could be halted there, mainly due to short-term upward overextension and not necessarily increasing resistance at these upper levels. Naturally, Fibonacci proportions would favor a retracement, specifically to cross under the highest fan line, reach down into the 63 to 64 range to flatten in the short term prior to another attempt higher, more closely approximating the shallower incline of the second or third highest fan lines. If this more neutral to bullish posture can be at least maintained into March, the possibility of contacting the 60 level will be much lower, resulting in a much more decisive halt of the long-term downtrend compared to previous times.